Welcome back to Dukascopy TV. I hope you had a great weekend and are ready for this week's first Targets in Focus. I'm Elaine Stenson and I'm joined on the line now by Steve Ruffley from Intertrader. Steve, the pound rose to 27-month highs against the dollar on Friday after the Bank of England said on Thursday that it was rolling back stimulus to the UK housing market, adding to indications that the economic recovery is deepening. The Office for National Statistics said its second estimate of UK third quarter gross domestic product was unchanged at 0.8% quarter on quarter. It was the fastest quarterly rate of growth in over 3 years. Meanwhile, consumer spending rose by 0.8%, the fastest pace since the second quarter of 2010. Based on all of this, what are your 1, 3 and 12-month projections for the cable?
Well, I certainly feel like the UK economy is stronger and stronger by the month. I think we've almost accepted that the growth figures are simply not going to return to pre-crunch levels. There still seems to be plenty of economic optimism, and as you say, with the consumer spending at its highest level in 3 years, people are demonstrating this optimism by going out there and spending, and that's how we know the economy is getting stronger. However, there obviously, with all these things, there is a downside. Where we've seen recent figures where over 9 million people are really struggling to service the debt, and to a point where they can't afford the essentials. With inflation so rife and people not being able to afford the energy prices, etc., there's certainly things of concern for the government, and I think the next one is probably the housing bubble. So the only way I know as a trader and economist to control interest rates is, to control inflation is by interest rates. So I think that unfortunately interest rates are going to rise in the UK, but I don't necessarily see that as a bad thing. I see it as being good and bringing money back into the UK. So I guess my kind of predictions for the pound against the dollar are that it's going to continue to strengthen, and I say over 1 month we're probably going to hit 1.6641. Over 3 months, probably rise to 1.73670, and maybe 12 months it'll get as high as 1.83090. So I think really the pound's going to appreciate against the majority of major currencies over the next kind of 12 months, I guess.
OK, the euro fell to fresh session lows against the dollar on Monday, while mixed Eurozone manufacturing data underlined concerns over the economic outlook for the region. What are your 1, 3 and 12-month projections for the euro-dollar?
Well, again, the euro-dollar has already opened low this morning and it's going to target 1.353, which is a good level to tell us the direction of the market. I mean, below this is really 1.33950, which is a major kind of technical point of attraction. We continue to move lower, then I really do see, I don't know if we'll get there before Christmas, but the market definitely wants to return to 1.3000, which is a technical and very important fundamental level. Unfortunately, my view for the Eurozone is not as rosy as it is of that of the UK. I still foresee a lot of problems in the Eurozone. So again, I'm going to have to see really what happens from the non-farm payroll figure, I would say, on Friday. That's certainly going to send ripples through the economy. But for me, really, the kind of technical view is that the euro is certainly going to weaken. The strength of the pound so apparent. I would see the euro really kind of definitely wanting to hit 1.30 and then do some consolidation. But longer term over the month, I see the euro trading as low as 1.30840. In 3 months, I'm definitely going to break that and get it down to a 1.277. And then maybe 12 months as low for me as 1.20950. So I really do see the euro weakening over the short, medium, and certainly I would guess over the long term, probably moving into 2015.
OK, and finally, Steve, the yen continued to be pressured by expectations that the Bank of Japan will implement further stimulus measures in order to meet its target of 2% inflation by 2015. What are your 1, 3 and 12-month predictions for the pound yen?
Well, again, we see some real problems coming out of Japan. I feel the yen is probably going to weaken against the pound and the dollar quite aggressively over the next 6 to 12 months. The problem is that really a country that relies on exports so heavily is fine, but unfortunately internal policy cannot necessarily stimulate growth. So as we mentioned before, the growth figures are slow, but they are steadily increasing. But the UK demand, the European demand, the US demand, it simply isn't there. It isn't there to support the vast expansion these countries need and the amount of exports that they need to have sold. So for me, unfortunately, internal policy has very little effect on the global scale. So Japan, again, they can do whatever they like to make their exports more competitive and to try and drive the price in the right way. However, what they can't do is stimulate world growth and world demand. So while people still remain relatively poor compared to where they were maybe 5-10 years ago, and we are seeing the shoots of recovery and people going into the market and buying things, the overall global demand for goods is just dropping. So unfortunately, countries like China, India, and Japan that rely so heavily on exports are going to have to pay the price. So I wouldn't say it's irrelevant, but it's fairly relevant on a global scale for what Japan can actually do internally to stimulate that demand and that worldwide growth. So really, in the short term, I see the yen really, again, falling against the pound and the dollar. I would expect the yen to be trading down the pound at 176.668 in the next month. Maybe 3 months down to 189.324, and by the end of 2014, the pound appreciated being higher as 2081.30.
Steve, many thanks for your forecast today, and that's all from me for now. But Darren McDermott will be back on Wednesday with more currency forecasts, so do tune in for that. Bye for now.